Welcome to the second trading week of October. Q4 2022 has started with a bang. Are you ready for more? If you answered yes, you're in the right place. Hello, I'm Quinn and this is your weekly markets forecast from the team at ForexSignals.com. Last Friday's bombshell US non-farm payroll release commenced what will likely be one of the most active news cycles in recent memory. Although September NFP came in well below August, the US unemployment rate actually fell. To say the least, the American labour market has muddied the financial waters. So, what else does early October have in store? Let's dig into the key events and markets to watch for the 41st week of the year. Okay, so starting with Monday, it's not a heavy day for data itself, but we do have the International Monetary Fund annual meeting starting. And given the landscape that we've currently got at the moment, it's not traditionally an economic driver per se in itself, but I suspect that we will have some kind of market reaction if there's anything key being brought out of the IMF. We're expecting them to talk about everything that you might imagine in terms of the global drivers at the moment, climate change, the Russia-Ukraine conflict, all that kind of stuff. So our focus pretty much for Monday would be the S&P 500. Now you can see here on a daily, we did have that really strong hawkish reaction from Friday that closed there. Just really hanging on to this swing low here from June. Now that in itself, it wasn't really necessarily the non-farm payroll data itself, more the fact that we've not had an uptick in unemployment. So there's just really no reason for the Federal Reserve to change course at the moment, and that's the kind of pricing in that we're seeing there on the S&P 500. So as we go into Monday and Tuesday this week, I'll be honest with you, I think we really think that we're looking for more downside. We'll just look at this daily perspective here just for a second. If we do get a break lower from here now, what it really brings into focus is these swing highs here from September 2020 and also this swing high from February 2020 as well. Now, I would expect the stronger supports as we go into the end of the year to be around here. So even though I suspect we're not going to get down there this week, certainly if we do get downside traction from here as we're going into the middle of October, it could potentially be sort of like teeing up a market that it wants to go as low as around about here, 32.25, that kind of an area, which is a sizable target, but that could be an end-of-year target for the S&P 500. If we do get any rotation higher this week, then I'll be honest with you, I would be looking for more places to get short. The first obvious retracement here would be back up to 37.20, which is from Friday. That would be the first port of call. But I wouldn't want to be long this market. I would definitely be looking for places to establish a short or maybe add to short positions that I had in the market. On to Tuesday, and the pound sterling is going to be our focus. We've got early data printed in the UK for the average earnings index and also the employment change for August. Now, the earnings are expected to increase, which obviously is inflationary, but the employment is expected to fall to 127,000. We've also got Governor Bailey as well. He's going to be speaking later on in the session. So potential volatility is going to be on the pound all day, I would have thought. And obviously bear in mind, as we go into November, the Bank of England is not meeting again now till early in November. And with what's happened in sterling and the gilt market over the last couple of weeks and the political pressures in the UK, that meeting is going to be absolutely critical. So the pound is going to be one of those markets that there's going to be some fantastic opportunities on, at least for the next 8 weeks, I would say. So for Tuesday, we're looking for volatility. We prefer it on for sterling against the Japanese yen. I very much like this bigger picture now. The way that this is setting up, the technical setup now for the pound against the yen is really quite nice. Given as well, look how the volatility has spiked down to this 150 support area here from March 2021. So we've got a long bias. We're looking for some sort of continuation move from here. If you look at the if you look at the 1 hour here, we have just closed the week now just very neatly on top of the support area from the 22nd of September, coming in at around about 161, something like that. So we're looking for upside from here. Now, the only thing that I would say about trading the pound against the yen at the moment is be very, very super careful of the Bank of Japan. Make sure that you know, if you're trading any yen pairs, that you know exactly where that intervention was. Here it is here, you can see it. I'll just take that back to a daily chart. You can see that there on the 22nd, you can see the how much volatility was created by the Bank of Japan's intervention. So if you are going to get short the Japanese yen, which you will be if you bought sterling against the Japanese yen, just make sure you've got your stops and your risk management really well checked, because if there is going to be another intervention by the Bank of Japan, it is going to be expected, and you definitely do not want to be on the wrong side of that kind of a move. But certainly, as we go into this week, there is no reason to assume that there's not going to be some decent opportunities on the pound against the Japanese yen. We like the upside from here, and it's not looking like it's in a bad spot right now. Midweek trade on Wednesday is all going to be focused around the United States. We have PPI numbers out and also the core PPI, so that's gonna bring the dollar right to the top of the pile. But bear in mind, we've also got the FOMC minutes from September being released as well. Now, there's no press conference attached to that, but it still is worth having a look at them, looking across the news wires, see if there's any tiny inflections in those minutes that we can draw out as we build a picture towards the end of the month for the States. Also as well, given our proximity to the harvest, it's worth taking a note of the World Agricultural Supply and Demand Estimates report, which is out on Wednesday as well. That for us brings a bit of a focus in on wheat, and here you can see a daily chart for wheat. Now, we are bullish on wheat at the moment, given our placement in the year as well. And as you can see from this daily chart here, there's definitely been a nice bullish trend developed since mid-August. There's potentially some seasonality built into that as well, which is understandable. But there is new money coming into this rally as well at the moment. So we've just tagged this resistance area here from the down leg, which coming in late June this year. But what we would be looking for is any rotation lower here. We'd be looking for the bulls to step in to this 826 area down to 800 area. If they can hold that, I suspect that we are going to get more upside potential from here. Obviously, the first barrier is going to be this 965 swing low from March this year, but then potential resistance as we move towards the end of the year could certainly come in at 1024 up to 1066. So it's potentially a nice trend to get involved in between now and the end of the year. Moving on to Thursday, and it's probably going to be the most important day of the week. The inflation data is going to dominate the news headlines from the United States. We've got CPI numbers expected to come in slightly higher than the previous 0.1%, but the core CPI, which is stripped out CPI data without the volatility of energy and food prices, that's actually expected to come in slightly lower, 0.5% off the previous 0.6. Now, that gives us a slight conflict in CPI data, but what it is going to do is it is going to put a lot of emphasis on the dollar. If both of the numbers come in worse than expected, that is going to put a very hawkish tone on proceedings, and we would expect some more dollar strength from here. So this is the dollar index here that you can see on a daily chart. You can see how well we held this support area from the end of September. The bulls have sort of re-established intention to move the dollar higher. Now, could we get more upside from here? Yes, I think we could. It's very much going to be dependent, given the unemployment data from Friday. If we get an uptick now, particularly in core CPI, and that is out of whack with the market expectations, then we're definitely going to get more dollar upside from here. So just because this market has moved quite aggressively to the upside, never ever discount the fact that it could potentially carry on going. That could all change very, very quickly, of course, but just as it currently stands at the time of recording, we can't see any downside in the dollar at the moment. And obviously that CPI number is going to really be super critical as we go into the end of October for determining whether this is now going to hold as a potential area of resistance, or we're now going to be looking at taking out the 114 highs. So finally on to Friday, the calendar is looking a little lighter economically, but we've still got a few bits from the US to contend with, and they are primarily retail sales, slightly softer expected, 0.2 off the previous 0.3, and the core retail sales, which are actually looking for a slightly better reading, minus 0.1. Now, depending on the reaction to this, I think, to be honest with you, I think the CPI data from the day before is going to be more telling, but it is going to feed into our inflation narrative quite well. And so for that, we would just bring your attention to, as we go into the end of the week, where we are in the quarter and where we are in the year. Just keep an eye on these, on the US interest rates, on the yields. This chart here that we're looking at, this is a monthly chart of the US 2-year, which is the faster end of the yield curve. Now you can see here on the monthly, we're pretty much now at 4.31% on the actual yield in the US. We're just under this area here. Now, I'll just bring your attention to the fact that this is these are the levels of interest rates from before 2008. So it's a really big deal for the US where this interest rate is currently sitting. So if we do get high from here, it's a question of like, well, okay, well, the real level that we've got to kind of get over here would be 5.28%, which dates back to the last time we were there was June 2006. So that shows you exactly where we've been and how things are now stacking up historically. So just take that down to a daily chart. Of course, the yields are just as tradable as anything else. If we and there's certainly rotation both up and down in all of these markets. If we do find any kind of like leveling off or any support here around about 4.51, any sort of support should potentially, in theory, come back into the market at 3.4. Now, are we going to get there within a week? Now, I can't see it myself unless there's something really seismically different in the CPI numbers and the way that then structures the dollar. But certainly at the moment, when you look at the way that this yield is actually moving, there's nothing in the pipeline that looks like it's going to slow this down. So any break, any closing of the week above 5.1, we are now looking at the highs from 2006 at 5.29. And don't forget, you can read our full weekly preview report anytime that you like by simply scrolling to the bottom of the homepage of our website. On the far left, simply click on Forex Forecast. The coming 5 days feature a collection of US economic metrics highlighted by CPI and core CPI. With inflation being the #1 market driver worldwide, these numbers will undoubtedly drive participation to asset classes around the globe. As the old saying goes, when the US sneezes, the world catches a cold. By Friday's closing bell, the markets will have put this statement to the test. Be sure to join us in the trading room for analysis of all these critical events as they develop. Until then, trade well, and we'll see you in the next live stream.